What's up everybody, Tom here with another video. In today's video, we'll be talking about why this chart is the most important to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the Nasdaq, Sp500, Tesla, gold, silver, Bitcoin, and more. Boy oh boy, has it been a wild 24 hours in all of the markets, with the attack of the Doge on the rest of the cryptocurrencies, and of course, the big moves in the stock market. There's more to come. Stay tuned. Alright guys, well as we do on this channel, let's take a look at what happened in using a heat map of the S&P 500 yesterday, and it's clear to see that technology was under fire. Apple down 3.54%, Microsoft, Google, Amazon, Tesla, Nvidia, nothing was really safe from that sell-off in the technology semiconductor space. On the flip side though, healthcare continued to do very well, and there was some beats. So there were a couple of actual positions that were doing very, very well from decent earnings. In fact, the earnings overall has still been relatively solid this season. Speaking of earnings, we have more big news coming out. We've got PayPal, we've got Uber, Twilio, Fastly, all after the close on Wednesday. And we just saw Skills and Activision do a decent numbers there coming out of those stocks. We've got Square as well Thursday, Roku, Peloton, AMC, Cloudflare, Dropbox, Datadog. Thursday is probably Hyper Stonk Thursday, as I've named it here on the channel. And I'm really keen to be doing that day there and to see how these companies really represent in the financials. Let's now talk about the actual indices. And we saw the Dow Jones with the decent boomer stonks doing well, coming through here with a 0.36% gain. We actually had the IWM and the S&P 500 both kind of recovering closer to the end of the day. And really it was all that tech-led sell-off, over 3% during one period up until noon, and then of course some recovery at the close. But we'll be talking about the technical analysis levels throughout this video for this, because there's some really interesting phenomenon that are going on, and we know that there could be traps set here by Wall Street. If we go through the sectors, our favorite materials at the moment doing the best out in the charge, technology lowest, and of course consumer discretionary second lowest, which is to be expected. And yeah, it's pretty normal when these kind of market movements occur. I'll just quickly scroll through a couple of charts. Of course, we usually have a weakness in May, though after post-election, it can be strong. So this chart here is really not telling us enough about the market. Then we've got kind of the last 10 years. Remember, 2010 was also a negative year, which is kind of like where we're at after the pandemic crash. And this is the chart that shows us both things. So this is the chart we've been talking about, whether there's going to be a sell in May based on the fact that this has almost been like for like following the recovery out of the global financial crisis again. So will we get this sell-off in May? We'll continue to look at these price actions. Yesterday was just the beginning of what could be a bigger move. Q1 2021 earnings beat data remains incredibly strong, 85% beats, some core businesses suffering, but overall just a great number. And I guess that leads us into what we're looking at in the markets. And I think dollar index actually might be leading to giving us an idea of if the market is going to decline further. Here we have the 91.33, and we can see here that it's been finding resistance right at this point. And why is that important? Because we had support, resistance. We've got a 20 exponential moving average on the daily here. And guys, this is the zone that you get pumped for, because 91.33, look how strong it's been. Imagine if we get a close above there that knocks out the 91.50 as well. Do we go straight to the 92 in a participation phase? You would think so from a technical standpoint. We're also at the short area though. So if it's going to short or sell off right now, it's going to do it here. Now, as many people have been following the markets for a long time would know, a strong US dollar generally leads to a market sell-off. A weak US dollar usually leads to what they call risk on in the market. So money comes out of the US dollar and it flows into growth and equities and investments. And that's the philosophy that's pretty much stood the test of time. It's a good little addition to have on your charts. Let's scroll over to gold and see what that's been doing. So yesterday we saw Yellen come out, kind of knock around the precious markets here. And that 1797 area again was too much for it. That 1800 zone is just too much for gold at this stage. We go down to the 8-hour chart, one of our favorites, and you can see the big sell-off, and hopefully now we get some recovery. Not too much to really note here from gold. if you were going or thinking of going long, you've got to really wait for it to close above here and then signal to the next zone, which will probably be around 1825 from a technical standpoint. Trapped in a zone at the moment for gold. Move on over to silver. Silver also took a massive dive yesterday, bounced straight off that 26-ish level and got back up to the 2650. So this is a bit unfortunate. We go out to the 8-hour time frame and you can see the closure occurred, then the manipulation of the silver market occurred, as it always does, and now we're struggling. We want to get back above that 2660 and remain in this nice upward trend. I don't think there's too much to be concerned about yet, but it does suck whenever you see a market fall off that much. I probably would have some kind of trend line drawn through these last lows, and you can see it picked off that. So I would like that to hold. And if that doesn't hold, unfortunately, this squeeze may be all over before it really begins. So continue to watch the charts, continue to think that this is in an uptrend overall at this stage, and we're still aiming for that 28, and then a break of 28 will aim for the 30. So as long as the dollar plays the game and the rest of the market plays the game, we don't get too much more manipulation, these things should hold true right at the level where you expect buying pressure to come through for silver. We'll move on over to US oil. This one has played the game much better. Realistically, this is a beautiful thing. Channel breakout, move back, double bottomed here on the smaller time frames. We've been following oil on and off on this channel for a little while. Look at XOM as well. That was one of the ones we were looking at. And look at this, 66.42 completes there. If you go to XOM, which is of course Exxon Mobil, and you have a think about this, another beautiful little channel here in the stock, and then you can see how it's really been bucking the trend of the rest of the market and able to start moving up with the take profit target somewhere around this resistance. So it's nice to see oil really playing, and I think that oil's been one of the stronger technicals from our trades over really the last 6 months. We've been following it quite a lot on and off on this channel when it's presented great zones or great areas. Bitcoin, the attack of the Doge again, guys. It's come back. Doge attack all around 60 cents at the time of this recording on Doge. And I can tell you what, this really knocks around the market. I mean, there is some green recovery today, but it really hurts BTC in terms of just every time we ever see big moves in Ethereum or we see big moves specifically in Doge, it attacks this market. So is the crypto market healthy? Yeah, it's looking pretty good. Is this a little bit lower than we'd hoped? Yes, I would have hoped it would have held this zone up here better, where we had the ribbons of the moving averages. This is the 8-hour chart, so one of the better charts to usually look at. About 55.5 was where we hoped it found support. It moved down to the next level, which is around this 52.5, 52.8 area, and it's bouncing right now. Things to watch out for in the trading session today would be this specific point of where all the moving averages are, and once we close above that again, hopefully we can resume back to our trend of 60,000 and 65. It's really interesting to see the crypto market right now. Almost everything is going the same way as it did back in 2017. We're getting that movement of the alts. We're getting Ethereum coming through, which is going to then lead into ADA, Cardano, DOT. Some of those are going to do better. The big, massive kind of alternatives. And then we'll move into the really weird kind of coins. The coins that are, very much the altcoins, the ones that no one knows about. So the actual sequence is looking correct. But Doge, I think, is probably going to be a buy the rumor, sell the fact with that Saturday Night Live Elon Musk guest appearance. What do you guys think in the comments down below? Will Doge be a buy the rumor, sell the fact, or is it going to continue up past that event coming on Saturday? Let me know in the comments down below. Tesla, the demon was found yesterday, 666 support, held for now, so that's great to see. Sold off through the early morning, instantly found buying pressure straight on the 666, went a little bit lower, but then bounced up. We want to see lightning bolts here, trough, peak, higher trough, and then a higher peak. We want to see the movement through this area here, and then for it to really come back to the 700. And I think what's going to happen is probably it's going to hit 700, find resistance, and then start chopping in here until it can find better direction. Why do I think 700 is going to act as resistance? Two moving averages here on the 4 hour, the 20 and the 50, right on the 700. So if it bounces, let's say, over the next 24 hours and goes crazy back up to the 700, I would expect day traders to be selling at that level. So we need to watch that on Tesla, and we maintain if we get through this zone with the break close, unfortunately, 625 and 600 become open for the next movement. There's going to be not much support before 625, previous little bits of wick buying, and then the 600, the key psychological level. Tesla, scary at the moment, but did hold through the session yesterday, which is good news. Let's now move over to the indices. This is where all the action's really been occurring. And there was a great little trade here for people. We've really been honing in on this 13,725. And I can tell you what, when we saw yesterday's movement and we got into that first 1 hour and we saw that closure underneath that 13.7, a lot of day traders would have been floating around in here. And you can see the sell, the closure, and then bang, massive amount of sell off. Almost got to the 13.3, hits 13.4. Why does it hit 13.4? Because there's a little bit of wick resistance here and then instantly bounces off that zone. Good day trading, very much the completion of the overall channel. If we take that distance and we extrapolate that out, see how it proofs. So that is correct. And it was actually a very, very predictable thing. We did this on the live stream last night. If you load up QQQ and you have a quick look at that, it's the same sort of thing, but it was very sharp and aggressive. And I think this is because really when we're talking about proofs and we're talking about algorithms in the market, sometimes these closures occur so quickly that the market just sells off so fast that the bear side is very, very tough to take advantage of. And the bull side is actually much easier to take advantage of. So I've said this a few times in the market, it's tough to short, it's much easier to buy. So if you're a beginner or you're just viewing this channel for the first time or anything, just remember in the back of your mind, if you were buying in the market most of the time, you will usually do much better than the sellers. Selling is all about being fast, quick, and scalpel-like in the markets. It's great to make money from sells, but just remember it is tough. It's way harder than the buy side. So QQQ broke through. Now, what do we expect moving forward? I'm not even sure if we can do much analysis here on the QQQ. I mean, you would think it bounces back up, finds this period of support, and then finds resistance and sells off. But when we look at the S&P 500, it tells a different story. So this one also sold off aggressively. It went through our area, the 41.75. That triggered huge selling pressure, which we expected. The algos got involved here for sure. You can tell because of the seriousness of the move. And now pre-market, at the time of this recording, we're sitting at 41.80. Where is 41.80? Right smack bang on the resistance. So it's right here where the 1 hour, 20 and the 50 are. It's right where the previous support was that was broken. And I expect us to open probably very similar to this price right now. If we do, there's going to be a fight between the bulls and the bears at this zone. And we're going to know whether this was just a little flash sell-off for no apparent reason, or it was the beginning of a further decline. Because remember, this is what happens in the markets. I said this at the start of the video. We get sell-offs, we get recoveries to trap retail traders, we then get flash sell-offs, then we get recoveries to trap retail traders, and then of course we have the really big sell-off that crushes everyone after that. Now, this is what I'm looking at. 41.80 is a resistance now because it was support and it got broken through. I want to show everybody on a daily what I'm talking about. So here's the strong recovery, okay? 20 moving average as well was hit on the daily, which has generally been a bounce zone. So it makes sense that it bounces off this. But I want to take us back, a little bit of story time back into when people were getting stimulus checks back in Feb and March. And remember what happened with the market. The market sold off, instant recovery. The market sold off, instant recovery. Sold off, instant recovery. And then, of course, that bigger crushing sell-off that takes out the leverage, takes out the weekly options, etc. This is the game that Wall Street plays on us as retail traders. It's just the reality of the situation. We know that 41.20 is the most key area. This is the key zone that really shows the more likely bearish scenario. At this stage, it's all games from Wall Street. Sell-off, buyback, sell-off, buyback. We know the VIX is getting high. We know it spiked through 20 yesterday, which is usually when you start to see kind of bearish action occur, but it needs to be sustained above 20 to really push through. And you'll see that 41.20 happen if the VIX spikes again and starts sustaining past the 20 level. So keep watching these markets. And really, I think the biggest catalyst this week is going to be non-farm payrolls. So we have non-farm payrolls on Friday. That's the unemployment change or employment change in America. And we should be able to see from this figure how the market feels about current sentiment right now. As always, guys, if you enjoyed this video, please remember to smash that like button, hit the subscribe button and the alerts, and join us 1.5 hours early before US market open. It's going to be a massive day Wednesday, and of course Thursday, you can't miss it. It's Hyper Stonk Thursday. It's been labeled on this channel. Are you guys keen? I know I am. Bye for now, everyone.